Alrighty. Are we live? I think it's live right here. Tell me when you guys see it, Chad. Oh, there it is, baby. Oh, thank you for asking for the likes, baby. But good evening. I hope you are having another wonderful day. You have a live watch list here today once again. Some of you may have enjoyed that there for the end of last year, but now... yeah, we got Tesla earnings on the way. It is supposed to be beginning right about now, so we are right on schedule. I do have some keys to go over, so depending on how today plays out, we are going to see. They haven't began yet, so I'm going to have it for you, but I am glad you're here. I have a couple of things to go over, so again, we got some plays. We got everything, man, but this conference call is very important. A couple of analysts have already commented just how muted the stock reaction is on Tesla if you guys see this. So it's about to be crazy. We saw a lot during, Microsoft yesterday. So, Chad, we are going to have to see how this plays out. But I am glad that you are here. Do me a favor. If you're here right now, I need you to say what's up in the chat. I need to see who made it here right now. And I need you to like that button right there. Like the button, like the video, but hit the button. Make it like you like the button. You know what I'm saying? Say what's up, man. So we're going to see. I'm going to give it a couple minutes here if it doesn't begin. I am just going to shoot right into everything. Oh, there you go. There's the chat, baby. What's up, Brian? What's up, Gus? What's up, Howlin? What's up, G? Gorilla? One way, baby. Aaron Delgado. Oh, Lord, the chat's too fast for me now. Wow. Oh, let's go. Y'all still like lagging by like 200 likes, though. Hold on. Why are you being so shy right now? I'm just telling you, if you made it to the point where you are watching a conference call with us, you cannot be shy right now. You cannot be shy right now. I'm saying you better be hitting that like button. You better be getting active. And again, we have a couple of keys here. So if they delay this conference call a little too long, I'm just going to get into everything because tomorrow should be very simple. There you go. There the likes are moving up. Come on. Don't be shy with me, man. But here's the deal. Actually, there's a couple of things. I even have a theory here right now. Elon said he's going to discuss things about the Cybertruck. He said they're going to push it there till May. But one thing here after hours that has developed, people are saying the growth rate makes no sense. So pretty much if you look at the 1.8 million in production that they are talking about, they're saying it ain't going to happen like that. But maybe Elon has a trick up his sleeve. So we'll see. Oh, you a lurker? Let's go, baby. I love the lurkers. Let's go. You better hit that like button, man. So it's going to be very, very key here. And again, I don't see if there's any other analyst updates here, but we're going to find out now. Bro, they still haven't started. Is this going to be live or something? Is Elon brewing something up? So here, let's just get into even a little bit of the watch list tomorrow. I mean, we've been here for how long? 2 minutes? So 2.5 minutes. So run it, baby. I don't have an intro today, so yeah. But that way, if anybody's watching the recap, hopefully I could go over what is going to happen tomorrow a little bit more actively until this starts. So we're waiting for the conference call right now. I'm going to play it, but now let's talk a little bit about what's going to happen tomorrow. So I was wrong on yesterday. I got my dates mixed up, and I need you to hit that like button one more time, baby. Amen, amen. But GDP. You're going to get that tomorrow. It will be a big deal. As you see right here, there's also going to be jobs data as well as real estate data, and that will also have a big effect, and that's something we want to keep in mind tomorrow, but it's very simple. If there is a big drop in GDP tomorrow, this is going to spur all of the hard landing type plays, a.k.a. buy bonds, buy gold, maybe people go to value a little bit, maybe like utilities, maybe. Otherwise, if there is a rise in GDP or maybe it comes in better than expected, that would actually lead to the soft landing, and maybe even commodities and some of the old trades from last year, they may start to come back. It's on. Oh, let's go. Run it, baby.
Jump into Q&A. Elon has some opening remarks.
All right,
Elon?
get ready, man. So we'll get back to the keys. This is big.
So 22, just going through a 22 recap. It was a fantastic year for Tesla. It was our best year ever on every level. Team did an amazing job. It's an honor, of course, to work with such an incredibly talented group of people. So in 2022, we delivered over 1.3 million cars and achieved a 17% operating margin, the highest among any volume car maker. I think maybe among any car maker. While doing so, we generated $12.5 billion in net income and $7.5 billion in free cash flow.
Where did that
importantly,
cash
the
flow
Tesla
go?
team achieved these records despite the fact that 2022 was an incredibly challenging year due to forced shutdowns, very high interest rates, and many delivery challenges.
Interest
So
rates was the second thing you
it's
brought
worth
up.
noting that all these records were in the face of massive difficulties. A credit to the team for achieving that. The most common question we've been getting from investors is
Elon
about
always sounds
demand.
worried. That's why he's always tweeting.
Thus far,
I don't feel
so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So
okay, that's good right there.
It's hard to say whether that will.
That's
continue
not
twice the rate of
guidance,
production, but the
and
orders
it's Elon. But that's you're
high,
getting a pop on that.
And we've actually raised the Model Y
You
price.
said
a little bit
orders
in
are
response to
double
that.
of production.
So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so. So I think it's a good thing, all things considered. We're also making very good progress on cost control, and we're seeing the costs of production in Berlin and Austin drop commensurate with the growth in production, so as you'd expect. So, with respect to autopilot, as of now, we deployed full self-driving beta for city streets to roughly 400,000 customers in North America. This is a huge milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. And we're currently at about 100 million miles of FSD outside of highways. And our published data shows that improvement in safety statistics is very clear. We would not have released the FSD beta if the safety statistics were not excellent. Regarding batteries, production rate of 4680 cells reached 1,000 cars a week at the end of last year, and we're increasing capacity for 4680 cells by another 100 gigawatt hours, as announced at Giga Nevada yesterday. Our long-term goal is to get to well in excess of 1,000 gigawatt hours of cells produced internally, and continue to use other cell providers. So to be clear,
bro, this is how Elon talks all the time. I just listen though. Again, that order remark is what got you here.
Lithium-ion batteries is quasi-infinite, and will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. And we've got an amazing plan for making the 4680 cell low cost and high energy density. So energy storage also saw record growth, and that is continuing to accelerate. That's always worth remembering that the three pillars of a sustainable energy future are obviously electric vehicles, solar and wind, and then the third key item is stationary storage to store the energy from solar and wind, because obviously the sun doesn't shine all the time and the wind doesn't blow all the time. So if you have those three things, you can convert all of Earth to a fully sustainable situation, many times over, actually. So I would like to just, make it clear that there is a path to a fully sustainable future for humanity, and our goal at Tesla is to accelerate progress on that path as much as humanly possible.
Cool. Now tell me about the margins.
So we were obviously ramping up Megapack production.
Cash flow, Cybertruck,
and we expect it to grow at a rate quite a bit faster than our vehicle output. So, in conclusion, we're taking a view that we want to keep making and selling as many cars as we can. We believe we can keep pushing for strong volume growth while retaining the industry's best operating margins. As we mentioned many times before, we want to be the best manufacturer. But really, manufacturing technology will be our most important long-term strength. So, and we'll talk more about our upcoming plans at the March 1st Investor Day. And lastly, I want to once again thank all of our employees for delivering another record-breaking year. Congratulations, guys.
Thank you.
Thanks,
done.
Elon.
So
and
wait
I
for the
think Zach has some
CFO,
opening
but
remarks as well.
Elon added about
Thanks, Martin.
$1.20
So
a
as
share.
Elon mentioned, 2022 was a terrific year for Tesla. I also want to congratulate the Tesla team and also say a thank you to our suppliers for your support during quite a volatile year. On a full year basis, revenue increased over 50%, operating income doubled, free cash flows increased over 50%, and our margins remained industry leading. Additionally, we continue to make progress on overhead efficiencies as non-GAAP OPEX as a percentage of revenue improved further. For Q4 specifically, sequential and annual margin was impacted by ASP reductions as we were managing through COVID impacts in China, uncertainty around the consumer tax credit in the US, and a rising interest rate environment.
You might get guidance here. Hold
Note
on.
that in 2022, rising interest rates alone had effectively increased the price of our cars in the US by nearly 10%. Additionally, COGS per unit has increased on a year-over-year basis, driven primarily by three factors. First is raw materials and inflation led by lithium prices and discussed at length in previous calls. Second, we are working through the early ramp of inefficiencies of our Austin and Berlin and in-house cell production factories. Third, our vehicle mix over the last year has moved more heavily towards Model Y, which carries a slight cost premium to Model 3.
Yeah, most of us,
Partially
we know most of
offsetting
this
these
info.
impacts,
We're waiting
we've
for
continued to
guidance.
execute on Tesla controllable cost reductions in line with the progress we've made in prior years. These improvements include our continued work to gradually move towards a regionally balanced build of vehicles. The energy business had its strongest year yet across all metrics, led by steady improvement in both retail and commercial storage. While much work remains to grow this business and improve cost, we believe we are on a good trajectory. As we look towards 2023, we're moving forward aggressively, leveraging our strength and cost. There are three key points I wanted to make here. First, on demand, as Elon mentioned, customer interest in our products remains high. Second, on cost reduction, we're holding steady on our plans to rapidly increase volume while improving overhead efficiency, which is the most effective method to retain strength in our operating margins. In particular, we're accelerating improvements in our new factories in Austin, Berlin, and in-house cells, where inefficiencies are the highest. But we are attacking every other area of cost and unwinding cost increases created from multiple years of COVID-related instability. This includes logistics, expedites, accumulation of material buffers, part premiums, productivity, and overheads, as an example. As the world transitions from an inflationary to deflationary environment, we expect a strong partnership with our suppliers.
Bro, are they
on this
driving
journey
while
as
doing
well.
this?
In net, we've priced our products with a view towards a longer-term cost structure. Thus, there will be an impact on operating margin in the near term. However, we believe our margins will remain healthy and
That wasn't a
industry-leading
good
over
one.
the course of
Impact
the year.
on operating margins in the near
Third,
term.
we are continuing to ensure funding is prioritized for our long-term roadmap. This includes expanding in-house cell production, bringing Cybertruck to market, development of our next-generation vehicle platform, expansion of our manufacturing footprint, and growth of the energy business. We're looking forward to discussing these plans in more detail on our Investor Day in a month. Thank you.
So
Thank you very much, Zach.
Small
Let's
guidance.
now
That
go
margin
to
comment wasn't
investor
good.
questions.
Damn,
The
already?
first question is, some analysts are claiming that Tesla orders net of cancellations came in at a rate less than half of production in the fourth quarter. This has raised demand concerns. Can you elaborate on order trends so far this year and how they compare to current production rates? I think
we've already answered that question.
Yes, exactly.
It seems like they're
demand far
pushing this
exceeds
to
production.
the investor day.
And we actually are making some small price increases as a result.
Thank you. The second question is in similar vein. What is the initial reaction been to global price reductions in early 1Q 2023, specifically in terms of order intake levels? We've answered that one as well.
Yeah.
So let's go to the next one. The next investor question is, will Tesla be able to take full advantage of advanced manufacturing production credits for battery cells packs? So $3,700 per long-range Model 3 and Model Y. It's $45 a kilowatt hour. For autos and energy products, and how much does Tesla expect to earn in the coming year from these credits?
I'll say a little bit about it, then I think Zach will add some. Long term, we expect these the value of these credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours a year of production, or even a few hundred gigawatt hours, it's very significant. So, but the credits do rely upon domestic manufacturing, and in the case of Panasonic, with domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic in the future. We think it probably will be very significant in the future.
Yeah, just to add and put some boundaries on what we're expecting in terms of impact to Tesla for this year. So different products we think will get different amounts of credit. The regulations here are still in flux, and there continues to be updates. So this is just our best understanding at the moment. But we think on the order of 150 million to 250 million per quarter this year, and growing over the course of the year as our volumes grow. And part of the work we're doing here,
that's a little bit of
which
guidance.
is
120 million a quarter on EV credits.
Incentive package is trying to incentivize is, as Elon mentioned, to move more manufacturing onshore in the United States, which is Tesla's plans anyways. And so I think we're pretty well positioned over the coming years to take advantage of this. But then also, part of what the goal of this incentive package is to improve adoption from our customers. And so we also want to use these incentives to improve affordability as we think about what the price points are on our products going forward. And so as we were thinking about our pricing changes in the US a couple of weeks ago that we announced, we were looking at what the credit benefit to Tesla would be to make sure that customers are able to receive the benefit not only from this that we're receiving to some extent, but also on the consumer-facing side, which is currently $7,500 per car of tax credit, assuming that subject to the MSRP caps and the income caps. So we want to use this to
he's totally driving
accelerate
right now.
Sustainable energy, which is our mission and also the goal of this bill.
Thank you very much. The next question from investors is, after recent price cuts, analysts released expectations that Tesla automotive gross margin excluding leasing and credits will drop below 20%, and average selling price around $47,000 across all models. Where do you see average selling price and gross margins after the price cuts?
Yeah, go ahead.
Yeah, I'll jump in on this. So, there's certainly a lot of uncertainty about how the year will unfold, but I'll share what's in our current forecast for the moment. So, based upon these metrics here, we believe that we'll be above, both of the metrics that are stated in the question. So 20% automotive gross margin, excluding leases and red credits, and then 47K ASP across all models. And so, two other comments I want to make on this, just tactically on sequential ASP changes from
That's
Q4
quite
to Q1.
interesting.
just as a reminder,
You just gave an average
know,
price of what they're expecting
ASP
to sell,
reduction is
excluding
not
and
as
including
large
credits.
as the reduction in configurator prices.
It sounded good,
As
but
in
the stock's
Q4,
going down.
we had backlog customers that we're delivering cars to at a lower price book, given that backlogs had been so long for so much of 2022. But then also there are various programs in place that we used in Q4 that lowered ASPs.
The sad part is you only have 30 minutes to trade this now, or 20 or 10 minutes.
The second comment I wanted to make here is that, as a management team here, we're most focused on what our operating margin is. And so, as other areas of the business become more important, particularly the energy business, which is growing faster than the vehicle business, and as we're heavily focused on operating leverage here, improving efficiency of our overheads, we think the
Tesla stock
right
is the one in the
metric
bottom
for
right
us
here.
to be focused on is operating margin.
I guess you
And
don't even
so
need this.
I wanted to make sure that I shared that with the investor community as well, because that is what we're primarily managing to now.
Yes, something that I think some of the smart retail investors understand, but I think a lot of others maybe don't, is that every time we sell a car, it has the ability just from uploading software to have full self-driving enabled, and the full self-driving is obviously getting better very rapidly. That's actually a tremendous upside potential, because all of those cars, with a few exceptions, I mean, only a small percentage of cars don't have hardware 3. So that means that there's millions of cars where full self-driving can be sold at essentially.
You're trying to pump the FSD add-ons for software.
100% gross margin.
If you're smart.
And the value of FSD grows as the autonomous capability grows, and then when it becomes fully autonomous, that is a value increase in the fleet that might be the biggest asset value increase of anything in history. Yeah.
Thank you. Let's go to the next investor question. Since Elon started political influencing, polls from Morning Consult and YouGov show Tesla brand
You'd crush them with your life.
Show Tesla brand favorability declining in 2022 and division among partisan lines. Such brand damage can impact demand. Does Tesla track favorability, and how will any brand damage be mitigated?
Well, let me check my Twitter account. Okay, so I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. It might not be popular with some people, but for the vast majority of people, my follow account speaks for itself.
He said, guided off of his followers.
Social media account, I think, maybe in the world, certainly on Twitter. And that actually predated the Twitter acquisition. So I think Twitter is actually an incredibly powerful tool for driving demand for Tesla. And I would really encourage companies out there of all kinds, automotive or otherwise, to make more use of Twitter, and to use their Twitter accounts in ways that are interesting and informative, entertaining, and it will help them drive sales, just as it has with Tesla. The net value of Twitter, apart from a few people are complaining, is gigantic, obviously.
So he's saying Twitter's marketing, and pretty much
Thank
since
you.
he's bought it,
Let's go to
brand
the next
value has
question.
increased because his Twitter followers
Please provide
increased.
a detailed explanation of where you are on the 4680 ramp. What are the current roadblocks, and when do you expect to scale to 10,000
That's the only answer to that
vehicles a
question?
year?
Wow.
A week.
Yeah. Thanks, Martin. First, I just want to say congrats and thanks to the Tesla 4680 team for achieving 1K a week in Q4. It was no small feat. Definitely a result of, more than a couple of years of hard work.
Okay, 7 more minutes. The stock will kind of move after.
4 lines are in production, with the remaining 3
you really
in stages
can't
of
even trade
commissioning
it,
and
I believe,
install.
on New York.
Really, our 2023 goal as a 4680 team is to deliver a cost-effective ramp of 4680s well ahead of Cybertruck. Focus areas are dialing in and improving the quality of the high-volume supply of mechanical parts, and driving factory process yields up as much as possible. Between the two of those things, if we achieve those key goals, we'll be well set up for a major 4680 year in 2024.
Thank you. Next investor question is, Elon said previously that FSD Hardware 4 will most likely come first in Cybertruck. Is that still the current plan? Do you expect there to be an upgrade path for Hardware 3 cars to Hardware 4?
Yeah, Cybertruck will have Hardware 4, and typically, for 2023, Cybertruck will not be, a significant contributor to the bottom line, but it will be in next year. So it's an incredible product. I can't wait to drive it personally. It will be the car that I drive every day. Actually, I'm wearing the T-shirt with the smashed glass. It's just one of those products that only comes along once in a while, and it's really special. So, yeah. So, with respect to upgrading cars that have Hardware 3, I don't think that will be needed. Hardware 3 will not be as good as Hardware 4, but I'm confident that Hardware 3 will still far exceed the safety of the average human. So what we're aiming for is well, how do we get ultimately to,
comment in the chat if you have a Tesla Cybertruck pre-ordered already.
Say 200
and
or
for how long?
300% safer than human. Hardware 4 might be, 500 or 600%. There will be a Hardware 5 beyond that. But what really matters is are we improving the average safety on the road? But it is the cost and difficulty of retrofitting Hardware 3 with Hardware 4 is quite significant. So it would not be, I think, economically feasible to do so.
Thank you. The next question is for Zach. Zach, when do you think Tesla Insurance will become big enough revenue source to warrant providing more details in the financials of the business so investors can compare it to other insurance companies?
Yeah, I think it's probably going to take some time before this business is large enough for specific financial disclosures. But I'm happy to provide an update on where we stand in the business. So we're currently at a $300 million annual premium run rate as of the end of last year. We're growing 20% a quarter, so it's growing faster than the growth in our vehicle business. And in the states in which we're operating, on average, 17% of the customers in those states are using a Tesla insurance product. So, and that number continues to tick up as we spend more time in markets. And we see most of the adoption occurring when folks take delivery of a new car, as they're setting up insurance for the first time, as opposed to going back and switching when they already have insurance set up. So there's an inherent stickiness in the insurance business. But
yeah. Sorry, go ahead.
No, I was just going to say, just as a broader reminder on kind of the motivation for starting this business, it was to improve, and still is, to improve the total cost of ownership of our cars, given that we're seeing high premiums of insurance from third-party companies. And that remains our priority here. We'll obviously run this as a healthy business, but we want to make sure we keep our costs low and insurance stays affordable to our customers.
Yeah, and so there are two really important side benefits for Tesla Insurance that are worth mentioning, one of which Zach alluded to, which is that just by Tesla offering insurance for our cars at a competitive rate, that makes the other car insurance companies offer better rates for Teslas. So it has a bigger effect than you'd think, because it improves total cost of ownership or insurance costs even when they don't use Tesla insurance, because now the Geicos of the world have to compete with Tesla and cannot charge outrageous insurance for Teslas. So it's great. So it has an amplified effect, very important. Then it is also giving us a good feedback loop into minimizing the cost of repair of Teslas for all Teslas worldwide. Because we obviously want to minimize the cost of repairing a Tesla if it's in a collision. And for Tesla insurance. And previously, we didn't actually have good insight into that because the other insurance companies would cover the cost. And actually, the costs in some cases were unreasonably high. So we've actually adjusted the design of the car and made changes in the software of the car to minimize the cost of repair. Obviously, minimize the best repair is no repair. Avoid the accident entirely, which since every Tesla comes with the most advanced active safety in the world, whether or not you buy full self-driving, you still get the intelligence of full self-driving for active safety, active collision prevention. So it's giving us this really good feedback loop for, again, reducing total cost of ownership, and also just figuring out how to get, if somebody's car is in an accident. Most accidents are actually small. They're like, a broken fender or scratched side of the car or something like that. They're not, that's the vast majority of accidents. But we're actually solving how to get somebody's car repaired very quickly
Analysts
and
are
efficiently.
saying Ronaldo and Kylie Jenner have more Instagram
and like I said,
followers.
those improvements actually apply then to all cars, and like we're making just to emphasize another key point, because some of these points might be lost, so I apologize for being repetitive, but it's remarkable how small changes in design of the bumper and improving obviously improving the logistics of providing spare parts needed for collision repair have an enormous effect on the repair cost. So if you're waiting for a part to get repaired and that part takes a month, now you've got a month of having to rent another car. It's very extremely expensive, and of course you're missing the car that you love and actually want to drive. So this is actually a very significant effect on total cost of ownership and customer happiness.
Thank you. The next question from investors is Cybertruck production still on track for mid-year?
We do expect production to start, I don't know, maybe sometime this summer. But I always try to downplay the start of production, because the start of production is always very slow. But it increases exponentially, but it's always very slow at first. So I wouldn't put too much stock in start of production. It's kind of when does volume production actually happen, and that's next year.
Thank you.
Yeah, that's right, Elon. Just to emphasize on that, we've started installation of all the production equipment here in Giga, Texas. Castings, GA, internal assembly, body shops. We built all our beta vehicles, some more coming still in the next month.
That's very good news, but it's still going to take time.
The ramp will really come 2024.
Yeah, exactly.
They borderline just said it's already ready to go.
Thank you. And the last investor question is, with near infinite global demand for energy storage, where should Tesla build the next megapack factories? How many are needed on each continent?
It's a good question. It's not something I think we'll provide an update about that in the future, but it's something we're thinking about very carefully. Really kind of what is the fastest path to 1,000 gigawatt hours a year of production?
Bro, low-key, that Cybertruck thing was probably the biggest piece of news on it.
You'll see announcements come out later this year, and
everything else was dry.
Next, that answer that question.
Thank you. Okay, and now let's go to analyst questions. The first analyst question comes from Rod Latch from Wolfe Research. Rod, feel free to unmute your mic.
I think I'm unmuted. Can you hear me?
Yes, we can.
Okay, thank you. Just firstly, it sounds like your 1.8 million unit volume indication for this year is somewhat more supply constrained and demand constrained. Then I have a follow-up on cost. But is that an accurate statement?
Well, okay. I mean, our internal production potential is actually closer to 2 million vehicles, but we're saying 1.8 because I don't know. There just always seems to be some friggin' force majeure thing that happens somewhere on Earth, and
pretty much they wanted
we
to
don't control
sandbag it.
things like earthquakes, tsunamis, wars, pandemics, etc.
And this analyst, he has an outperform 160 price target on Tesla.
If it's a
guy
smooth
just
year,
asked the
actually,
question.
without some big supply chain interruption or massive problem, we actually have the potential to do 2 million cars this year. We're not committing to that, but I'm just saying that's the potential. So
committing to 1.8, saying they
too.
could do 2, that's a nice update. But
yeah, thanks for clarifying
doesn't
that.
hold too much weight.
And on the cost side, the numbers that we just saw from you, as you pointed out, were weighed down by the 4860 ramp.
Yeah, this is
Berlin,
live,
Austin,
so you better like the video.
Gigacastings processes not at rate. Can you give us a bit of an indication of the headwind that you're absorbing from those things, like you did last quarter? And then lastly, on cost, do you think that we can tease out an interesting data point from on where battery costs are headed from this announcement that you just made last night? If I'm correct, it looks like the investment cost per kilowatt hour is less than half of what I've seen anywhere else, maybe $30 a kilowatt hour for that capacity.
I don't think we want to say the specific number, but it's interesting if you look at the size of Giga Nevada that is allocated to make 100 gigawatt hours is a small fraction of the size that currently makes about 35.
Yeah, I mean, the goals we outlaid at Battery Day on reducing the investment required to deploy cell manufacturing, I mean, that's been a key focus of ours, and the team is doing a good job hitting the marks on that focus.
Yeah, and it goes back to the point I was making, and I said this several years ago. I think Tesla's really the competitive strength that will be by far the hardest for other companies to replicate is Tesla being just damn good at manufacturing and having the most advanced manufacturing technology in the world. And if you've got that sort of advanced manufacturing toolbox, you can apply it to many things. And we're applying it now to battery cells. I should also say that we have other products in development. We're not going to announce them, obviously, but they're very exciting. And I think we'll blow people's minds when we reveal them. Tesla has the most exciting product roadmap of any company on Earth by a long shot, and we'll continue to, I think, be in that position. We got more great ideas than we know what to do with here. So the future is very exciting. As I said in the last call, there's going to be bumps along the way, and I think we'll probably have a pretty difficult recession this year. Probably, I hope not, but probably.
Elon Musk says probable recession this year.
One can't predict the short-term sort of stock value because when there's a recession and people panic in the stock market, then prices of stocks, or the value of stocks, can drop sometimes to surprisingly low levels. But long term, I am convinced that Tesla will be the most valuable company on Earth.
Thank you. And I think, Zach, there was a question on cost headwind in Q4.
Yeah. I mean, our weighted average COGS for the company, if you were to assume Austin and Berlin were at the cost structure of our other factories, it was on the order of
No, I've not sold my shares yet. I'm up like 950 on them right now.
So I think from there you can back into margin impact of those factories as of end of Q4.
Thank you very much. And let's go to the next question from Pierre Ferragu from New Street Research. Pierre, please go ahead.
Thanks, Martin. Can you hear me well?
Yes.
Yeah. Excellent. Zach, I'd like to follow up on the data point you just gave.
Pierre has a buy target with 320 price target. This analyst, he loves
you guys
Tesla.
Bottomed close to $36,000 in the middle of 2021.
Pierre loves Tesla.
And then the number went up as you had to face with inflation in input cost and the ramp of Berlin and Texas. And this quarter, I think we are close to $40K and we peaked maybe close to $42,000 at some point last year. And so my question from here is, how much time do you think it takes you to get back to this kind of 36K, which would mean, you know, Berlin and Texas and like the input cost, all that stuff is normalizing. Is that like, and that would be like a kind of like a 10% decline in the COGS per car. Is that something we can hope to see this year, or is that too optimistic?
You know, the Austin and Berlin ramp in efficiencies in 4680 will make a substantial amount of progress on that over the course of the year, and that's within Tesla's control. We're doing a lot of work on cost reduction outside of that. And we talked about supply chain costs, expedites logistics, attacking everything. You know, on the raw materials and inflation side, where lithium is the large driver there, and this was a meaningful source of cost increase for us, you know, we'll have to see where lithium prices go. And, you know, we're not fully exposed to lithium prices, but I think in general, is what we've seen from our forecast here, cost per car of lithium in 2023 will be higher than 2022. So, you know, that's a headwind that would have to be overcome to return back to those levels. So I don't think we'll get there this year, but I think we'll make progress. And we'll continue to find ways to offset these raw material costs that we don't have control over. And is there anything on that?
Yeah, like on the non-cells raw material, we begin to capture, you know, benefits of indexes tapering off. But due to the length of various supply chains, it does take time before this is reflected in our financials. And while aluminum is down like 20% year over year, steel is about 30% down year over year. The global non-cells raw materials market continues to be influenced by geopolitical situations in Europe, high production costs due to labor cost increases and energy spikes, and disruptions due to natural disasters like typhoon in Korea 4 months ago, pandemic lockdowns. So we believe that meaningful price corrections will ultimately come, but it remains uncertain exactly when. In the meantime, we continue to redesign supply chain to make it more efficient and work with our supplier partners to find more efficiencies, streamline logistics and transportation to reduce costs.
Excellent, thank you. And I have a quick.
Sorry, you wanted to say something?
I was just going to say, we're also, you know, our fleet is starting to mature, the 3Y fleet, and we're gathering a lot of data out of that fleet to understand how we can sort of bring some margin that we didn't know we had out of the product. So over the course of 2023 on the powertrain side, we're actually going to go after sort of some materials where we're paying for more performance than we need, or we have more content than we need without impacting reliability at all. And you know, that will actually add up to a pretty significant cost reduction on the powertrain side over the course of 2023.
I think
so
people are
we're not just sort of relying on
because everything they said they're under
design actions to
I think all the guidance they give so far is based off of higher costs. Kind of
if the recession is
and then they're just asking only the bullish analyst questions.
And I
if they
think
keep this up, it'll be a 160.
But I hope it isn't. That would lead to meaningful decreases in almost all of our input costs. So I would expect to see deflation in our input costs most likely, which would then lead to better margins. I'm just guessing here. So this is.
But I think people are liking the fact that
would be my.
All of their guidance now is based off of things working
Thank you so much. So as a quick follow-up, Elon, I was thinking about like FSD, and when you look at like the situation today compared to a year ago, it's like the progress has been like amazing in the quality of the product, but also its rollout. And so I was wondering, how much is this like impacting the take rate of FSD today? So do you already see that people are getting more excited by FSD because they see it around them on 400,000 cars and they see the value of the service already? Or is that too early to really see like to expect like an uptick in the take rate?
The trend is very strong towards use of FSD. And as you allude to, with each incremental improvement, the enthusiasm obviously increases. So, I think something that still a lot of people out there don't quite appreciate is that Tesla, I've always said like Tesla is as much a software company as a hardware company, but Tesla is really one of the world's leading AI companies. This is kind of a big deal, both AI on the software side and on the hardware side. With the hardware 3 inference computer, still the most efficient inference computer in the world, despite being at this point 5 years old from the design point. And with hardware 4 coming, and then hardware 5 beyond that, where there are significant leaps. And the Dojo computer.
People are feeling jumpy. They'll eat up the AI news, but I don't know.
Operationally at Tesla later this year. And we're seeing just a lot of world-class AI talent join the company. There's also the long-term potential of Optimus, where we're able to use our expertise in electric motors and power electronics, batteries, and advanced manufacturing to be able to make a humanoid robot that is actually useful and can be made at high volume with exceptional capabilities because of the autopilot AI that where we take because the car is like a robot on 4 wheels and the Optimus is a robot on legs. But as we
look at the prints. These are crazy.
The
spread is wild.
AI,
These are
and we don't see
crazy
anyone
right now.
even close to us in achieving this.
Again, you're right next to 150. This is a big point.
The value. Pierre, I think you appreciate this, and a few others do, but most don't know what I'm talking about. So, but it's this is the thing that has order of magnitude potential market cap improvement for Tesla.
Thank you. And the next question comes from Alex Potter from Piper Sandler.
Can you hear me, guys?
Yeah.
Yes.
Okay, great. So quick one on FSD. This, I guess, for Zach. Obviously, you unlocked some deferred revenue in the quarter that'll translate presumably into higher margins on every incremental sale going forward.
This analyst is overweight,
so long as people opt in for
$300 price
FSD.
target.
But was wondering if you're able to disclose the percentage of the $15,000 price that you're now going to be able to recognize as revenue up front rather than deferred.
Yeah, I mean, the way that we've structured this is a full self-driving package is 2 components. There's enhanced autopilot, the price of which is listed on the website. We fully recognize that. Then there's an incremental, which is for the additional features that full self-driving offers. And we've released a portion of that. And then there's a minority of the total package that's remaining that will be released over time as software updates are there. And in our shareholder letter, in addition to disclosing the dollar amount of the deferred revenue release, we also included in there the dollar value of the balance of unreleased deferred revenue that will be released over time with future software updates.
Okay, great. And then maybe one additional question here on the incremental capacity in Nevada, the 4680s that you're planning. It's a lot of batteries, obviously, and presumably you won't be putting all of those in Tesla Semi. So I guess 2 questions about that incremental capacity. First, is it correct to assume that all of those 4680s are going to be more or less fungible and usable in your entire range of products? And if the answer is yes, then if you had to guess, how do you think that 100 gigawatt hours would be allocated between your various end markets?
I don't know. This is a bit too much guessing at this point.
Yeah.
But
This guy is a $300 price target. He doesn't mind guessing.
Yeah.
I mean, you're right. Not all of the 100 gigawatt hours are going to go into the semi trucks. That is correct. I mean, we can.
Let's say, like I alluded to, a number of future products. Those future products would use the 4680.
Thank you. And the next question comes from George from Canaccord Research.
Hi, everyone. Thanks for taking my question. So you recently adjusted prices, and that may have put many of your competitors in the back foot. In addition to that, capital markets have recently gotten a lot tougher. So with those factors in mind, I'm curious how you see the current competitive landscape changing over the next few years, and who you see as your chief competitors 5 years from now.
Well, 5 years. 5 years is a long time. I was with the Tesla Autopilot AI team until late last night, and we're just asking. I was just like, so who do we think is
up
close
5%
to
now
Tesla
on the day
for a general solution for self-driving, and we still don't even know really who would even be a distant second. So yeah, it really seems like we're. Right now, I don't think you could see second place with a telescope. So, or at least we can.
Nobody can compete.
So, that won't last forever. So, in 5 years, I don't know. Probably somebody's.
All right, I sold out of my shares. 151.17. $2,100 profit.
That we're aware of.
I'm out of Tesla. I like the earnings though a lot.
But
I'm going to come back into it tomorrow, but I'll take 5% out of 7, and then wait for them to kill premium.
Yeah.
I mean, beyond that, Elon, like in the vehicle space, even though the market's shrinking, we're growing, and EVs have doubled almost year over year. So like whoever keeps up with the trend of EVs is going to be our competitor. And the Chinese are scary. We always say that. But like, a lot of people always look at the EV market share, but we always look at it as how much of the total vehicle space do we have, and we're just going to keep growing in that space. There's 95% for us to go get.
Yeah, and I don't want to say like I think
the end of an era. I'm going to come back into it, but I just think
car companies in China.
I think it'll go to 155 from here.
That is our experience.
But I don't want to go for. $1,200 more would be nice. That was a big losing position.
And they
went good, but it's good though.
So a lot of respect for the China car companies that we're competing against.
I just think they're
and
all that I get from this call
I would guess it would probably
and the earnings is nothing was as bad as everybody was making it out to be.
To be second.
No, I don't think it's overvalued. I think we have to deal with the market. I mean, it is a higher PE name, but that's it. All I've gotten out of this earnings and call is things are not nearly as bad as it seems. So I still think there's upside, but I'm just going to wait to reload and maybe get a better position or back right where I entered, and then that way I'll have some profit.
Super fired up about the future, and it's going to be great.
Just as a follow-up, the Inflation Reduction Act has created huge tax incentives for commercial vehicles.
You are not the Fox.
You mentioned an incredibly interesting product pipeline.
Told you that ain't my kid.
Are there maybe some plans to accelerate commercial vehicle form factors outside of the Tesla Semi to help accelerate EV adoption?
Well, I was basically saying that, yes, but I'm not going to give you details because this is nice try. Yeah, of course. So, we have to always look at like what is the limiting factor for new vehicles, because if the
then you got to wait for the news tomorrow once Kathy Wood says she bought in.
Total cell, lithium-ion
that's Kathy.
Output.
All of these trades are Kathy Wood.
So people say like, why not bring this other car to market or that other car to market? Well, it doesn't really help if all you're doing is shuffling around the batteries from one car to another. In fact, it hurts because you add complexity, but you don't add incremental volume. So it's sort of pointless. In fact, counterproductive to add model complexity without solving the availability of lithium-ion batteries. So as we get, we want a new product introduction to match where the cells are available for that new product to use those cells without cannibalizing the cells of the other cars. That's the actual limiting factor for new models, not anything else really.
Thank you. Let's go to the next question. The next question comes from William Stein from Truist.
Great. Thanks for taking my question. Elon, you started to answer
Again, this guy, buy
earlier,
target
but I like
245.
to ask this question about the
Bro,
AI
every analyst that's asking a
elements of your
question has a
business
high price
and
target.
ask if you could
I can't
comment
make this
on
up.
progress around Dojo and Optimus and your anticipation for the likelihood, for example, for the company to disconnect the GPU cluster in favor of Dojo and to have some market achievement in Optimus.
Yeah, I mean, obviously, since we're still at the early stages, there are big error bars in any predictions. So it's like easy to predict the long term, but hard to predict the time in between now and then.
Yeah, this guy did lower his target to 245 from 295.
Dojo
but
will
he's
be
still
competitive
Tesla
with the NVIDIA H1 at the end of this year, and then hopefully surpass it next year. The key there is like I think that is what's the energy usage required for a given amount of if you're training a frame of video, how what's the energy cost required to do that training, and we think probably we said this already actually at AI Day 2, so it's not new information, but we do see potential for an order of magnitude improvement relative to GPU, what GPUs can do for Dojo, which is obviously very specialized for AI training. It's hyper specialized for AI training. So it's not.
The market low-key has been liking his AI comments. That's when a lot of this started to run.
Just like if you do an ASIC
right there, you just got
something, it's going to be better than a CPU. This is sort of...
Again, you could blame ChatGPT for that.
Like a giant ASIC. And we're able to... since we're operating one of the biggest GPU clusters in the world already, we've got a good sense of how efficient the GPU clusters operate and what Dojo needs to do in order to be competitive. But we think that it does have a fundamental architectural advantage because it's designed not to be the GPU is trying to do many things for many people. They're trying to do graphics, video games. It's doing crypto mining. It's doing a lot of things. We're just doing one thing, and that is training. And we're also optimizing the low-level software so that it at a very sort of bare metal level. So it's just insanely good at efficient training. And the intercommunication between the Dojo modules is extremely high. You're not going across an Ethernet cable. It's like, so anyway, we see a path to an order of magnitude improvement in the energy efficiency per given unit of training. But we also have to achieve that, and so that when will it be achieved? It's hard to say, but we do see a path to get there. And then also in inference, like once you've got something trained, well, if you want to have a product, that's a consequence of that training, and that product may not be anything to do with cars, then the efficiency of inference is extremely important. And so we also have by far the most efficient inference computer with the FSD computer in the car. This has potential for products that aren't even really in automotive.
Thank you. William, do you have a follow-up?
Yeah, it sounds like the 1.8 million units you expect this year is supply, not demand limited supply. It sounds like by the lithium batteries. If you were to become demand limited, can you talk to us about your propensity to use price and and your relatively high industry margins to grow units and share?
Yeah. To be clear, the 1.8 million is not self-supply limited. We did address that number earlier in the call.
Yeah, it's roughly.
That's just us being conservative.
No, a self supply is roughly matched with that, and it's 1.8 million cars. If we get lucky, it could be more, and then the rest would go into stationary storage, the Powerwall and Megapack. True.
Okay, let's have the final question from Adam Jonas.
They got a Jonas brother?
Hi, Elon. First question is it time
This is
for
Morgan
Tesla
Stanley.
to
This is the dude who kept downgrading it to buy it.
expand the captive FinCo?
His price target is 220 overweight.
These receivables, it's basically nothing compared to other big auto companies. Then I have a follow-up.
Zach, maybe just best to answer that.
Yeah, I mean, the way that we've been using captive financing so far is to plug what we believe to be gaps in the market of existing third-party products. And so we have a couple of offerings in Europe. We do loans for energy business, retail energy business here in the US. We do leasing, and we do a small amount of US loans that are very targeted. And so we're using captives to support market gaps, as I mentioned. So basically as a vehicle to support vehicle sales, make sure customers have access. I do think there's opportunity here to continue to grow this. We are growing it slowly here. It is a consumer of cash.
They retest
so
151 again. That's it. It's going to go nuts.
But
still got
the
one more
plumbing is in
dollar, but that's
place
good for now.
to do a lot more here. And I think we'll have to see how things unfold over the course of the year and make decisions real time as to how much we ramp it up versus ramp it back.
I think if we see a severe recession this year, which, like I said, hopefully we don't. In severe recessions, cash is king big time because it's in such short supply. So we want to be cautious about using cash for loans and that sort of thing for cars. I feel we're in a very strong position to get through a recession because we really don't have any debt, and we've got over $20 billion of cash, which is great. Actually, the cash is earning a ridiculous return, good return. So it's like non-trivial. The interest rate actually means the 20 billion is earning like quite a good amount. And I've made this point on Twitter a few times, and I'm sure a lot of people on this call understand the basic value of a security is a function of the risk-free rate, or we'll see how risk-free it really is, but of the T-bill rate. So if you've got, I think if I recall correctly, the S&P 500 has a long-term rate of return of roughly 6%. And so I think the Fed needs to be very cautious about having a Fed rate that potentially exceeds 6%. If we see deflation, and I think we are seeing deflation, then you would add the deflation number to the in quotes risk-free rate from the Fed, and as that starts to exceed 6%, now you're starting to exceed the long-term return of the S&P 500, and it starts to become questionable as to why not just put your money in T-bills or a savings account essentially instead of in the S&P 500 if the S&P 500 is variable and the bank interest rate is not. This is so basically the Fed is at risk of crushing the value of all equities. This is quite a serious danger.
Thanks, Elon. And just a follow-up, I don't want to steal thunder from March 1st down in Austin, but how close are we to that step change improvement in BOM cost where you could sell an EV for under 25 or 30,000 bucks and actually generate a
All
profit.
right, if it ends and I go blank
kind of
for a little
real
bit, just give me a second.
moving
Okay,
assembly
Chad?
line moment in manufacturing. Again, don't want to steal the thunder, but just if you wanted to kind of wrap up with thoughts there, that'd be helpful.
Oh, man.
Thanks, Elon.
I mean, I'd love to answer, you know, if I were you, I'd probably be asking the same question, but we would be jumping the gun on future announcements.
Fantastic. Thank you very much, everyone, for all your good questions, and we will see you again in 3 months' time.
Thank you.
Thank you. Bye-bye.
Oh, man, they were trying to get me copywritten with that. So, Chad, that one was an interesting one. I really think it was, what's it called? More or less, I just don't think it was as bad as everyone was expecting. That's it. The pop was on a couple of things. They only were talking to the people who had pretty high price targets. I think the average price target of every single person there was like 270 or something. But I sold out at 151. I'm going to be playing this one tomorrow, definitely. But the one thing I will say, I know I had to go up. I was running, man. I had to run here. We're getting some work done right now, so I had to. Yeah, that's why. And then I heard the music, and then I had to go. Nah, but I'll tell you right now, I think the positive sentiment is just coming from this was not as bad as what everybody expected. That's it. Like, just it's kind of not as bad as feared, but like overall. So I'm kind of mad I sold, but I feel like, you know, it's better to just take it safe than sorry. You will probably be like right here tomorrow morning. That's pretty much where we are right now. But it's overall just like that whole, like, dude, everybody pretty much the brand impact by what Elon did wasn't, like, it's not felt. That's it. Like, everybody was thinking that Elon and Twitter was going to clap everything and that it was going to have this huge brand impact, but pretty much from their guidance, it was borderline conservative. It seemed, that's what I think the idea here is, that it just seems like they did more or less not as bad. Like, it wasn't as bad as what people were expecting, and it seems like they are more or less preparing for the worst. So that's kind of more subjective when it's all said and done, but I really think this is just boiling down to, like, you know, people really thought this was going to be bad. I don't think it was a sandbag. I think it is in that sense, because if anything is better than expected, this thing is going to go crazy. So it definitely gives, you know, it gives Elon, you know, room to move in the future, but just when it's all said and done, it just doesn't seem as bad as what everybody was thinking. That's it. It was a slight sandbag. It still gives him flexibility, but overall, like, it wasn't bad. It's still 50% growth rate, all of that stuff. But overall, like, that's all I got from this call, and all I got from the earnings is that this isn't bad. Like, that's it. Yeah, people panicked from the price cuts. People panicked off of the Twitter, you know, Elon and all this. Like, you had 10, 20% drops off of damn tweets and people getting worried, all these analysts that downgraded the stock, all the people who did this. But when it's all said and done, nothing sounded worrisome, if that makes sense. Like, it was just a lot. Sadly, I'm more disappointed that people kind of made a big deal about it, because it's just not like, if you were like, even the Ross Gerber guy, like, if you're like, oh, Elon, focus on this, like, everything seemed fine. That's all. Like, it seemed like everybody was making a fuss, and nothing about the guidance, nothing about the report, none of that showed up. Like, it just, no matter what, like, you had an hour to look over it before everything, but you can't find that anywhere. You know what I'm saying? There's no sign of Elon is so distracted with Twitter than not. And, like, you know, again, I like what Elon said there at the end, you know, $20 billion in cash. That's pretty ridiculous. But at the end of the day, just my main point from this earnings, what I got out of it and what I got out of the conference call, it sucked they only had questions from the people there. I could hate Elon now because I don't own the shares and I made money, so that's good. But I don't even I think it was better. I actually, not holding any shares, I can't benefit off of the price going up or down anymore. I will honestly say it was good. That's it. It was good enough to get me out. It was good enough to make my money back on there. But when it's all said and done, like, that's it. Everybody made a real fucking big deal. A lot of people downgraded this stock. A lot of people went into it. I'll rebuy in of like once I feel we, burn some of the premium maybe, but at the end of the day, it just nothing was real. Like, you know what I'm saying? Anybody's worry was all imaginary. That's all it is. Just this idea of Elon losing control about, again, I'm shocked you had all these jackasses who are, who have all this money in the stock and they keep, tweeting at him and doing all of this. Again, I'm talking to you, Ross Gerber, that none of this showed up. That's it. I think they all had their motives. They want to get on the board and shit like that. But at the end of the day, the team seemed pretty confident. They sounded good. They gave themselves wiggle room. So I don't think they're trapped for any guidance for the rest of the year. I think they could pull off the 1.8 million number. And like he said, I think they're setting up to do a lot better than that. And I think it was a sandbag a little bit, but you got to dude, people were fucking shitting themselves over this. You know what I'm saying? Like, people were real. Again, I'm actually very disappointed in that Ross Gerber guy. You guys remember when he went up on every single news station? He went on Twitter, he went on Bloomberg, then he went on CNBC, then he went on Yahoo Finance. He went every single place to be able to tell everybody, oh I can't believe Elon fought. Oh, just Elon, stop tweeting. Oh, Elon, do this. Elon, like, honestly, I'm shocked myself, but it's just like none of that there's no evidence at all. So, and it was even a month and a half of Elon buying Twitter. There was enough time for this to be reflected there. People were panicking and making up stuff about the prices. They were making stuff up about Elon's personal portfolio. But none of that is there. You know what I'm saying? That's it. Oh, wait, hold on. Yeah, we're doing some stuff here right now. So at the house. That's why I had to run up and down. But yeah, it's is he mad he bought Twitter? Yeah, but people were mad about it. But again, nothing. It just, that's I'm curious now because of all of what could have went wrong didn't go wrong. None of it showed up. So the real question is now, how much of this is getting factored into the price or not. Now, you still have to deal with the market. You're going to get a bunch of upgrades and downgrades. You're going to get news of Cathie Wood buying in, all of that shit. You know what I'm saying? But that's the overall takeaway that I got from it. It's simple as that. All I got out of it was that everybody was, this could have been a really bad earnings. You could have saw this was the moment, the piggy bank was already cracked. I don't know if the piggy bank is fully repaired for many other reasons, but at the same time, it's just borderline, I guess sadly, I think we were all primed to expect the worst, and the worst didn't show up. Yeah, and now that's the thing. So I do have a little bit of time here. I think we could finish it out now because as we're saying, no BB buyback. Nope, that's why it's tin. Again, Tesla, this delusional shareholder disease. Yeah, so TD SD. Tesla, yeah, so it's really bad. It's really bad, but I'm out of it now, so I feel good, man. I found out I am not the father today. I got 2,100 or 2,200 net, and then we got to make up a $13,000 loss. I got to free up a ton of capital. Oh, it was beautiful, man. It was beautiful. You know what I'm saying? That buyback tin definitely failed, but everything else was pretty good. I'm happy. Thank you, my friend. I appreciate it. I'm happy myself as well. It was a great play. It could have been better. I really wish I didn't have everything else and that I bought more. But you got to remember, selling out at 150, I had shares that I bought at 130 and then 135, and then the first set a little bit higher there. So overall, I could take it as a net W here. We had a good average there, still kind of high. It was painful. And then we'll go from there. I won't be opposed to playing this tomorrow, but at the end of the day, now like everyone's saying here, yo, bro, we got GDP and a lot of data tomorrow. We're going to have more earnings. We're going to have Powell next week, So the beauty is I am going to be able to go after this once again. So, Chad, if you were not here in the beginning, we went over it. You're going to have GDP tomorrow. I misspoke on yesterday's watch list. I thought it was going to be today. I just got my dates mixed up. But you have a big data tomorrow. And if there's a big drop in GDP, that hard landing scenario, hard landing plays like gold, bonds, all of those, they're going to come up. If there is a big rise, then all of the soft landing plays are going to come back here too. So that's what really tomorrow is going to be about. But then at the same time, there's going to be a really big jobs report. Not really big, but just a really big data set. So, there's 5 other things tomorrow. You're going to be getting Chicago Fed at 8:30, GDP at 8:30, core PCE, and then PCE month over month will be arriving tomorrow, or on Friday, excuse me. Then you're going to get wholesale trade inventories, retail inventories, durable goods excluding air, new home sales, and then Kansas City Fed. So pretty much from 8:30 to 11, we are just going to be packed with a bunch of data tomorrow. So that is the first thing you really got to be considering when you're looking at it. And then now, like I said, how Tesla plays out in terms of guidance, it's all for sentiment. That's all it's really coming down to. I wasn't really expecting Tesla to, move the market like Microsoft. Like if you actually take a look, surprisingly, it's coming up a little bit here, but I feel like you're not going to get too much craziness, but the real key is coming down to how Tesla plays out in terms of sentiment. So right now, you're going up, like we're saying, all these people who are hating on the stock, people who are worried. I think that what's happening now is very, very good for sentiment. And then now, sadly, or good thing, is that you're going to kind of have a balancing act tomorrow in terms of sentiment with all of those data sets. So there's that. And now to bring you to your final point, ladies and gentlemen, it's very simple. And I think you saw this today. If you guys don't recall what happened, it was wild. We gapped down a ton. I mean, I think you opened up right here. You shot down. You were back down to 393, and then you ended up closing around 400 on the SPX. So, let me take you to another chart to show you, and this is what we brought up even during the stream today. But, here's your SPX chart. Closed at 40.16. You opened at 39.82 within, an hour of the day. You were down to 39.48, and then you closed at 4,116. And that's pretty much a 60-point move top to bottom. A lot of people were saying this was a crazy, wicked move, but it's I don't know if you remember what happened the other day. This was us the other day. You literally had at one point, it was this point was we were down to 3,900, and then you closed at 3,973. That was a 70-point move, and then continued on for another one. I mean, pretty much in 2 days, you went up 139 points on the SPX. So in a weird way, this was kind of like what we've seen over the last couple of days, and you've been dealing with this. And, the big thing, and we dropped because of Microsoft. That's a great question, but the guidance was bad, but then you kind of bought it back up. There was even a lot of bad earnings that came in through today that you got to also keep in mind. But it's very, very simple. Anything can happen, but it doesn't mean anything is going to stick. So even down to Tesla earnings now, it could help sentiment out. Maybe, if it really is a lot of upgrades and people treat it like Netflix and say, okay, it's in the clear, then it might be able to do its own thing. But what I'm trying to say here, man, and I really, really hope everybody understands this, until you get the rest of these earnings in Powell, all of this movement is bullshit. And I really, really hope you get that there, because anything can happen, but it doesn't mean it's going to stick. So even if we shoot up tomorrow back to 4,000, I doubt we will get past 4,100 on the SPX before Powell. We can if things are good with earnings. But at the end of the day, man, we have tomorrow data, another set of PCE, a couple more earnings out of financials, financial companies and stuff like that. But then what's going to happen? Right on Monday, earnings mode again. And then Tuesday, you're going to get Apple, I believe, and then Amazon, and then Meta. And then by Wednesday, 3 days into the week next week, you're going to have Jerome Powell. So, and then you're going to have more earnings after that. And then 2 days later, you will get non-farm payrolls. And then 2 weeks after that, you're going to get your CPI. So hopefully you're following through here with me. And that's why, again, these moves are great. I hope you could see some of the patience we've exhibited, going back and forth. And I don't know if I could get my plays up here. Because you guys remember, I think one question, and I could just start with these two plays right here to show you before I get into the plays. But what I'm trying to tell you, man, is that, somebody was asking me, hey, Josh, why didn't you close out your ES yesterday? They asked me that at 7:30 in the morning today because this went negative again. Sure enough, it's positive. This play, oh my gosh, $18,000 loss. I was down to $12,000 this morning. So the point is, and we've done this over and over and over and over and over again, and it is going to move. If you have good positioning and take money, you could do it. But the point I'm trying to make here, none of this really even matters, and the real dagger arrives at the next set of earnings, but mainly Jerome Powell. So hopefully you guys follow along with that. Hopefully you're ready for it. But now, let us get into the plays. So right off the bat, I still got plays for you, baby. I still got plays for you. You know what I'm saying? Oh, it's beautiful. It's beautiful. But right off the bat, I'm starting with Visa and MasterCard because tomorrow you have Visa after hours. Then you have AXP and MasterCard Thursday and Friday. But literally, there's been a lot of bad earnings in this area, and they've all done good. It doesn't matter if it's charge-offs, credit card charge-offs. Remember, Discover, they sold off 6%. By the end of the day, they were up 4%. That was a couple days ago. Today, Capital One, they raised charge-offs by 31%, and then they ended up the day up another 6%. So I think these are going to be good, and even then, if you don't remember, bro, some of these credit card companies, they were on fire towards the end of last year. So I would definitely keep that in mind. I think these are going to be a play. I have 0 plays on them now, but this is definitely something that I am going to be looking at coming into tomorrow. I think this one will be good. Yeah, baby, like the video. This is a live watch list, man. Hey, man, I got you, bro. MQ, Marquetta, that's a good one. That's a good one. Anything credit card related, I think they've been good and really just try to take advantage of the hype leading into earnings, and depending on sentiment now, tie that into the GDP and the jobs and wholesale inventories and new home sales tomorrow. Is like if sentiment is feeling juicy plus earnings, people are going to love it. You got a little bit of that today, actually. If I could give you a good example, just look at Tesla, how Tesla played out today. I wasn't really expecting Tesla to move, but you'll notice like middle of the day, once everybody started really getting like excited about it, it actually kind of started to ramp up a little bit more. A lot of movement, more or less. It didn't close too good, but you might be able to get a decent earnings reaction because over the last couple of days, there really hasn't been good earnings reaction. So keep that one in mind. That is play number 1. Then play number 2, baby, ANET. I brought these up yesterday with the cloud stocks. I took a play on it, but it's a leading cloud stock, and really why I like it, I'm expecting more downside on it, but quite simply, this one is a big mover. And what I mean by that, you guys remember that play? We hit $30 into $3,000 on an ANET. Only the OGs remember that one. That one was ANET is a cult favorite. But the thing about ANET, man, this thing is really, really high. So I think this is where we hit that ANET that one time. It was like $50 and it went up. So they're almost double, triple. They have a ton of premium right now. So I took a short here, 119. They were down earlier, then they bounced up. But pretty much it's like if they sell off, you could get $20 a share. If they do good, they're going to do $140. And as far as their earnings, I believe it's in a week or two. Let me see for you. Yeah, February 13th. So about 3 weeks or maybe a little longer. So you got a little bit of time. Then again, this is going to react to Amazon. This is going to react to anything that is related there to the cloud stock. So I have a play on it. We made that today. I think I'm down on it like $2, $3 a share right now. I shorted 50 shares at ANET this morning. I did it too early. I should have waited. But 118.56, I might be down to add on to it. But like I'm saying, this one is going to be a big mover. So if you don't got the balls for it, don't go for it. You know what I'm saying? Don't go for it. That's all. It's a big mover, purely risk to reward, and this is borderline of sympathy now to both IBM all the way down to Amazon and anything else in the middle. Wait, was that breaking news now? Oh no, I'm tripping. South Korea news. I got global news right now. South Korea GDP just came out. If you're interested in that. I could do this. Honestly, unfortunately, I have to sleep, eat, and go to the gym, but we could probably run this 24 hours a day, bro. We have a lot of stuff all throughout the day, and hopefully you're seeing over the last couple days how important the after hours moves have been. But that's why you get stream alerts. Honestly, that's why. But I'm glad we got to do this all live today. And I did sell out of my Tesla shares. I sold out at 151, wrong. So we got about 2,184. So just under. I did pretty good on the net. So again, we found out the child is not mine. So that's, oh wait, do you not see it? I forgot to switch screens. So yeah, there you go. There you go. But play number 2 is ANET. And then finally, play number 3. I don't know how you feel about this one. YCL. So this is the Japanese yen play. I was taking a look at it. If you recall today during the stream, the yen started to go up. And I was like, yo, the yen is already ticking back up. But actually, it's up 15th of a percent right now. And you could just notice it's had these little sell-offs. You're still above the January level or the December level. This was the latest one when we had all of the other stuff there. But it's kind of doing this little pattern again. So depending on how it plays out here, I don't want to, I'm not, again, nothing here is a recommendation, but all I'm saying is that there's a slight premium on the shares. I'm up 3% on the YCL shares. So if that goes negative soon, maybe this will be your opportunity. But all I'm saying now with everything I'm telling you related to Powell is just keep your eye on it. It's one of those points where it's not too expensive now. It overall is holding some more expensiveness with everything going on, but it's not as if, the other day we were up on it like 12%. And if you ever looked at the shares, it can move up a lot. So this would be a more ideal price. Anything below $34, I think would be great. But the idea here is, depending on how things play out, global markets, again, even coming into earnings and all of that, just keep your eyes on it and don't forget about it. Amen. Amen, baby. So, Chad, those are the main plays as far as everything else that we did here today. Welcome to the live watch list. I hope you're feeling good. You could go back in time. You may have already missed the conference call there with Tesla. But we got a couple of plays here. I closed out of my Disney because I'm a little B-boy. I got shooken out there after we opened up down with Microsoft. I said, hey, I don't want to lose profits on a pre-earnings play, but took about $200-something profit on that one. Closed out for $1 a share, $25 on Abbott, and then we just secured the bag there on Tesla after hours. So not too bad at all. And then as far as what I'm holding, I mean, here are all of the main plays. There's the bonds. They're working very good. The ES is back to positive barely. My NQ is doing very, very good, even Ethereum. But that ended up flipping. I think Boeing, we weren't down too much on Boeing today, and then it turned around here. It's easier to just see it on this. Again, Boeing, I'm down $1,200. At one point, I was only down $700 today. Then it bounced, but the earnings did not scare me. I thought the earnings were actually dog shit. So we're going to see how that plays out. The Amazon, believe it or not, I'm only down $1 per share on Amazon, but I got $10 per share on Microsoft. So that Amazon cloud play is still holding up. And then again, we went over here with the ANET, like I'm saying, down $3 a share. I might be willing to even average down on that one as well, too. And then we closed out of the Disney. I don't have child support right now, bro. This feels weird. I don't even know what to bring up. You are going to get airline earnings in the morning, so that could be one. So now really we're going to be dealing with Meta, the bonds, and everything else. I still down on that XLB, but I think that one's going to be manageable. And then again, no more Disney here. No more Disney for your boy. Even XLU dropped too. And then, yeah, man, that's pretty much where we're at. Not too bad. Total, I think even after today, even Tesla, I think it ended up being a good day. I'm pretty much back to where I started at the beginning of the year. The only difference is at the beginning of the year, I was not down $40,000 on ES and Ethereum. So we've done good. That means we've made money back on other things we were down on. I've realized profits. That's padding the stats here a little bit. So either way, we're in a good position. And now I got a couple of plays to ride out. Is that Tesla with the new high? Oh, there it is, man. He's going. He's going. It's not stop. It's round 3 right now. So that's going to be a good sign. But Chad, that is your watch list. I hope you enjoyed it. I hope I see you in the morning tomorrow because we got a lot of data and we are definitely going to be dealing with some Tesla, baby. Amen. Amen. Let's go. So, Chad, make sure you guys are hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And, Chad, I just want you to remember, baby, real faith is created through these moments. You know that? All the ups and downs. You don't learn anything when things are going good. You learn it when you make it through the bad. And when you could believe in yourself at the level where you shouldn't believe in yourself, that is where the real growth happens, Chadadonia. And remember, when things are calm and good, and the wings of calmness is usually pain in the future. But when things are bad and in the middle of the storm, my friend, in the wings of the storm, there is usually a healing, real learning, and real experience to come. So, Chad, God bless you. I hope you enjoyed the watch list. But I can't, now that we're live, man, I totally forgot. Do you have any questions? Because I could answer them right now if you would like. Now that we've gone through everything and all of that, I've given you my end of the watch list speech. But tell me, man, what do you got actually? My bad. That was totally my fault. My fault on that, man. You know, finger to the sky. Yeah, this is live, but you got to like the video. Otherwise, it won't show up live. It's a weird concept. So you got to like the video to get the most live content out there. Okay, I'm totally lying to you, but I'm just trying to get that like in there. You know what I'm saying, man? So show me some love on that. But what do you got, man? Starts on the Yang. Waiting on that one. Same philosophy with anything like UNG, but we're going to wait till the quarter. And even hard landing, soft landing data tomorrow will be about that. GDP data is good or bad? Yeah, because pretty much if it comes in worse than expected, hard landing, better than expected, people are going to push the narrative of a soft landing. Currency wars on hold. Well, what's happened? The dollars came down. So they're not on hold, but now that's why all eyes are on the Fed, and that's why I'm even saying here it's way too early to decide anything because everybody's acting as if the problem is solved when really you got a big dollar problem just lurking over the horizon more or less. The dollar can react to China, but just really depends, and in a weird way, we've low-key been insulated just in the fact that there's so many other issues with so many other countries that China's big, but, you know, the 99 other countries matter. You know what I'm saying? Even though China is of size until middle of the summer. So come summertime, that's when people are expecting China will be in full force. That is when maybe China's dominance on currency markets or China's dominance on trade will start to rear its head into the dollar. Of course you'll see me, baby. Amen. Amen. Josh at 4 p.m. You like it? Hey, bet. The yield curve to uninvert, right now it's only been about July, August, September, October, November, December. It's been about 6 months. So we got a little bit more time there, but it could be another 6 months or it could be another year until that occurs based on my initial theory given to you years and years ago. So at least it doesn't change. The yen ticker again is YCL. Bought Tesla. Oh, yeah. I sold out my Tesla. It was not my child, man. It's good. Finger to the sky, baby. Amen. I believe in the Powell hammer. I don't know. I don't know if and here's the deal. If Powell doesn't come, there's a couple scenarios I have outlined. Very simple. Is if Powell, one, I don't see a world where Powell doesn't beat us down. If that makes sense. I don't see a world after listening to this guy for so long. I don't know if there's a possible timeline where Powell is genuinely excited about what he's seen with markets. That's the part I really do believe. However, like I brought up earlier today, there is a chance that even Powell may even try to sound bearish and the market won't accept it. Does that make sense? And I hope you know, even though Powell is amazing, in terms of, communication sometimes and threading that needle, I've seen a lot of stock market in my life, and I've seen it happen before, and I've seen it happen with the Fed, where he could legitimately say the most bearish thing in the world, and if everybody puts their moon suit on and they put on their jetpack, yeah, they could kind of call his bluff in a way. They will eat it up and show no mercy. So hopefully you see what I'm saying with that. And that's another scenario where I'm saying, even though I think Powell, that's why I still have the ES. That's why I still have upside, and that's why I'm into that. Because, and I'm not going to be afraid of upside, even though it has moved up a decent amount. But that's the thing you really, really got to keep in mind there. So that's the other scenario, and then the final scenario, and I don't know how probable this would be, but my other final scenario would be simply that maybe something really got better. And that would be the only way Powell acknowledges all of this with open arms, is if truthfully and genuinely something got better and Powell said, yeah, actually, these financial conditions are somewhat warranted, as now they allow us to keep higher rates, but we believe the odds of a soft landing have dramatically increased. Do you see what I'm saying? That line right, pretty much, if Powell says anything about the odds of a soft landing increasing, I don't think he would do it because it would cut out. Oh, do you guys hear me? Testing. Testing. No, you hear me? Testing. Tell me when you're here. Wait for it. Wait for it. There we are. We're back. So hopefully that makes sense, though. Like I'm saying, I don't know the probability of Powell. Like I was saying, the final scenario is essentially Powell saying that soft landing is more likely. So I don't know if in that way he could welcome the rally with open arms and at the same time maybe keep rates high, but it would put him in a box, because if he says that's a welcome development and it changed a little bit, then that would end up playing a little bit weirder. So that's my take for that one. I hope that's a good one. We're definitely going to talk about this more next week, but you're getting the early read right now if you're here, so God bless you. And then somebody said, I just scored $15,000. What would you do with that money? So if you said it's the most you've ever had, it's very simple. Whenever you come into a big amount of money, this is my rule, you don't do anything for a month. Okay, if you're a greedy, impatient bastard, 2 weeks minimum. That's it. That's all you got to do. That's all you got to do. Pretty much, man, it's simple. You know, let's say you met a girl today, right? And this is like the hottest girl you've ever met. You know what I'm saying? And like everything's like chill, and you're like, oh my God, she's amazing. She has a long term, right? You're not gonna propose to her in a week. Okay? So that's how I feel with the budget. Do you feel me? So just wait at least a month. You know, give it a month. You could get married after a month. But overall, you just got to wait, and I would deploy that money after a month, and I would space it into anything. And again, the best part is an amount like that, you know, I'll tell you a good story. You know, one of my earlier properties that wasn't based off of a hard money loan, you know, in my life, I have been able to acquire properties as cheap as $3,000 to $9,000 for the down payment, like cash to get the keys. So, you know, something like $15K, dog, you could do a lot with that, and that's the beauty of it. Listen to Elon. He just said it. If there is a recession, that cash and your risk-free cash, man, that goes a long, long way. So that's definitely something that I would keep in mind, more or less. So you let me know what you think about that. And, again, you can pull it off. Even recently, there was one house I did. That one was even off of it wasn't off of like a FHA loan, and that one was like $15,000 to take the keys. But the house made me like $150,000 in a couple of months. So, you know, if you're wise with that money, you could turn it into a lot, man, and it could really, really set you up. However, you know, I'm sure we've all been there. You know, taking that big amount of money, you might get lucky on some other things, but don't underestimate how easy it is to go from touching the most amount of money you've ever had to not having it in a couple of weeks. So be wise with it. Take it slow, and I think you're going to be good. Chipmaker, I'm still short on Qualcomm. I like NVIDIA kind of both ways, but we're going to have to see here. And so far, some of the earnings weren't too bad, but maybe Intel tomorrow will give us a little bit of insight. So let's go, man. Any final questions? Man, we've been here for an hour and a half. That's good. That's good, man. I'm glad we got to do that live. That was a lot of fun. So shout out to Cole, baby. Shout out to Cole. Amen, Habibi. Amen. What you got? Give me a final one. Give me a final one. Anger to the sky. The call, I was here. That's it. Final question. I'm waiting. No. Have a great night. God bless you, Jay, y'all. God bless the call. Honestly, thank you guys for being here. That was a lot of fun. Thank you for nerding out on a conference call with me. That was very, very great. So I think that's the final one, man. Wait till next week. We even got more earnings too. So that's something. But Chad, I've already told you what it is. Let's have fun tomorrow morning. Enjoy the rest of your night. I'm going to go poop and take a shower, do what I need to, man. And let's go, man. I hope you're excited. We got a lot of data 1 hour before the bell, baby. So enjoy it, and you know what it is, man. Finger to the sky, Cult Real Estate in 2 hours. Y'all better be there. You know, y'all better be there. Stop playing with me, man. Amen, amen. All right, guys. I love you all. Thank you guys once again, and let's go, baby. Horna. Oh, what a day. I am not the father. Thank God. Thank you. Thank you, Elon. Good work. Good work. And everybody's dramatic about Tesla. Okay, I love you. Peace out. Bye.